Hey guys, Cotton Candy TA here. Welcome to Beginner's Course Part 4, Targets. Okay, so before we start this lesson, I want to just talk about the previous lessons for a second. It's important from this point forward that you guys are watching every single video from the past. So this being course 4 or lesson 4, it's important that you have watched lesson 1, 2, and 3 to go into 4. And then moving forward as we go into lesson 5, watching of course 1, 2, 3, and 4, and going to 6, watching 1, 2, 3, 4, and 5. Everything that we're building upon in this course uses theories and fundamentals and different things from the courses that we talk about and discuss from the past. So whether you've watched it once and you fully grasp it, or you need to watch it multiple times to grasp some of these theories and concepts, the important thing is that you've watched them and you understand. Now, a lot of students of mine do tell me that they can't quite grasp it the first watch through, which is quite common. This is very content-rich things we're talking about, and again, just to drive a point home, it took me years to figure out some of this stuff. So if it's taking you 2 and 3 and 4 and 5 watches to fully understand and get it, that's perfectly normal. That's perfectly fine. Don't feel like you're behind or you're not grasping these concepts. It will click as we continue to go through part 4, part 5, part 6, part 7. Some of these past theories will click. You'll continue to see some of the stuff I use, and it will be able to help build your confidence. So no worries if you have to watch it multiple times. Quite normal. Okay, so the importance of targets. Targets are a foundational tool. They are something that, whether you've been trading for a week or whether you've been trading for 10 years, targets are kind of like your foundational toolkit. They are one of the cornerstones to trading. It's something that you will use in every single trade you enter, no matter what level of your professional career you're at, or if you do this for fun, or no matter what level you're at. Targets will be something you use in every single trade you do from this point forward. Maybe you're already, actually, you are already using targets. You just don't know that you are, and you don't have that piece identified and broken down. Or maybe you do, and this is not news to you. But regardless, targets are something you will use every single trade of your life from now till the day you stop. So what is a target? A target is a point of interest. Accumulation and distribution, those are two targets. Accumulation as a target, distribution as a target, just like we talked about in the past. Targets are exactly what they sound like. They are targets for us, whether they are buying targets or selling targets. They are targets. Now we're going to use Tron today for this example because Tron's a fun coin. Everybody loves Tron. Everybody got burned on Tron just like me. We all have some story with Tron. Let's just say that. So I'm going to draw one level just for right now. Swing low. We've talked about this in the past, right? Swing low. We have a big move up, big move down, swing low. This is the daily chart on Tron right now. Oh, there we go. I forgot to turn on the chart. Let me just repin this line up. So swing low right here. So Tron, right? This is the daily. We've got one level, right? So from up here, if you want to just break this into a very easy way to relate to the idea of targets right now, if we are here and we are distributing, target would have been some type of swing low like this right here. This guy right here. It's a pretty funky line. This guy right here, the swing low. And as you can see, Tron kind of did this thing where it came down and it hit its target, and then it got a lot of buying interest because it hit a target. This was a critical level for Tron. If we were to actually take this to a weekly chart, you can see that this was pretty clearly target for Tron for this whole big dump that Bitcoin went into throughout the year, the distribution period, the exhaustion, and that elongated distribution period. This was a critical level for Tron because after this swing low on the weekly charts, we don't really have a swing low. We have one more level here, which is the start of this move up and kind of that swing high, which is if you look at 315 sats compared to 222, it actually did make an attempt to go for this. Yeah. This was a critical point for Tron to keep this level in terms of not getting obliterated into nothing. So let's just delete that. So we have a clear target. So that kind of gives you guys an idea of targets and what is a target. Target is a point of interest where if you pretend for a minute that you were a bear and you were up here and you're turning into a bear market, you know, where's your target? Well, your target is a swing low, right? It's a critical level. Most coins actually hit that critical level and then found support through the bear market that we were in there, or that distribution that we were in. Okay. So that's what a target is. What makes that a target? Well, again, that is a point of heavy interest, right? Exactly like we talked about, it was a critical level, and you know, kind of as simple as that. Is there a target criteria? Target criteria is something that I get asked a lot. What is the criteria to seeing a target? You will, in your career as a trader, often change your target criteria. This is not something that is set in stone. This is something that you have to refine. There is a science behind it. Don't get me wrong. There is a science behind it, but this is something that as you kind of develop your own trading strategy with my techniques, and as you kind of develop further the idea of targets, it will be something you constantly refine. So I can't give you a set of criteria that's going to show you targets. I have my own set of criteria, and I refined it to the point where I feel very confident in where I'm buying and where I'm selling. And maybe I should do something here to show you kind of what my criteria on this target would be. So as we're using levels of support and resistance, let's just draw a few basic lines here. We're just going to draw a few. We were on the weekly chart here. Let's go back to the weekly chart actually to do this part. We're on the weekly chart here. Sorry, I forgot to flip the screen over, but it's okay. You guys didn't miss anything. We're on the weekly chart here. You know, Tron swing low. Let's talk about criteria for a second. What would I be using for criteria on this? Well, first let's just identify very basic few levels. We've got the swing high and low of the candle, right, of our swing low. Okay, maybe we need to break this into a daily now because it's not so identifiable where the swing low and high is in here, and that's going to answer some questions for people too. People are asking me, you know, what swing high and lows do you use, right? You have to kind of break it down into weeklies and dailies and kind of pick them out. So looks like we've got another target here, right? Or sorry, a level here. And let's switch back to the weekly. Oops, we don't want to do that. So let's take that away. So we've got a swing low. That's quite high. Let's look for the daily level in there somewhere. Okay, so it looks like that will be our daily level, right, or our swing low level right there, right? And that's you know, quite accurate, as you can see. Touch down, touch up, touch down, touch up, break. And this is just 4 basic levels, and this ends up being quite accurate, as it always is. You know, we focus on kind of the science of trading here, and the exacts into why these market moves happen is the best way to put it, is the science of trading. So we talked about in the last video a little bit about downtrends and patterns and you know, things like that. Not too much in depth, but you know, very mildly. But you know, I'm using a combination to kind of go off into the criteria of targets. I'm just going to draw a pattern here real quick, a valley, okay? So in this valley, what I want to do is I want to take the swing low that initiated the move, touch the left side right here, right? This swing high to the left side, because I know this is a valley. We could have identified that as this move started. And I want to touch the left peak and I want to touch the right peak, okay? Oops, we're a little off, and I want to create kind of that intersecting point off the level. So we have the base of the valley, we have the move up and the move down. And let's just turn this transparency to 0 for a second. Okay, and we're going to turn that to 0, and we are going to come back to this. All right, so I want to show you guys something else. The swing high that initiated the move, right? To that swing high right there, right? This right here, swing high right here, And it's okay if you're not following. The whole point of me showing you this graph right here, even though it's not in the realm of what we talked about, is that I have my own set of criteria that allows me to see where my targets are. And this will be something that you refine over time, over the course of learning, everything from now to lesson 40 or whatever ends up being the last lesson, whether it be 60 or 100 or 20, whatever ends up being the last lesson, right? You will refine your set of criteria. But we have that swing high to the next swing high, right? That creates a trend line for us, right? We talked about this, the bleed, as I like to call it in the last video. Now let's zoom in for a second here. And I'm showing you this very specific example for a reason, because this is going to come into very handy in the future. Starting to identify these things now and spotting them out now is going to come in very handy. So we have this trend line, right? Very, very simple. It respects it. It comes back up. It acts as resistance until we, kind of reject one of these levels here. We come up and break it, and then, it acts as support for us. So, I think I'm going to have to redraw. Oh, no, there it is. I think I'm going to have to, no, I don't have to redraw this. Now I'm going to fill this back in, and I want to show you something. You see, trend lines, right, these downtrends and these things that we're looking at, they are typically just valleys and peaks. Very important to know that trend starts have a trend end, and we are not going to get into that. My famous saying, another lesson for another video. We will learn it, but I wanted to show you guys. I would have had a very specific buying criteria on this. And this was pretty eye-opening to me, understanding that in these downtrends, right, when we have these kind of bleed movements, they are typically created by some kind of peak or valley, or some type of pattern that you haven't identified. If you don't see it, you probably haven't identified it. But these patterns, these way the markets move are very specific. So as you can see, this downtrend bleed, what we're looking to end this downtrend, we would have had this mapped out. We wouldn't have needed to wait for this swing high. All we would have needed to do was this. We would have just needed to touch this point right here and then drag this down, right? We would have needed to drag this down until our level, our swing high, is matching up with our 2 points on that pattern, right? On this valley that was created. With that said, I would have gone from here, point 1. I'm going to redraw this one time, just to go over this again. And we are not learning this in this video, but I'm just showing it to you to kind of give you an insight that you will have a set of criteria that allows you to identify targets, and this is part of mine. Okay, we've got, and I'm going to just refine this. I'm just going to draw. Okay, I clicked 3 times. Okay, let's start that over. I really want to illustrate this. So the swing low that started the move, right? The left side of this shoulder. Oh, I know why this is happening, because I don't have the outline tool on. Okay, let's turn that back on real quick. Okay, try this one more time. Third time's a charm, guys. Okay, swing low that started the move, right? Intersecting with the swing high. Okay, once that swing high has stopped moving up and is creating a lower high, right? I know that this is 0.3 for this pattern. That creates a future trend that was identified right here. This whole entire move down was identified right there. Now I'm going to line this up a bit differently here, right? I'm going to take this and line those 2 points up. That's lined up there, and that's lined up. Is a magnet tool on? No, it's not. Okay, so that's lined up right there like that. That's close enough. Kind of keeps snapping around, so I'm just going to leave it like that. That's close enough. And you can see that for me, my buying target would have been this line of support, because I know this line of support would have completed the move of this valley, whether it was going to move down, right? Whether it was going to break this valley and move down. At this point here, we know that this valley is going to act as support in the future, because we had enough momentum to break this valley. So this valley acts as support in the future. So In this move, my target, whether I was looking at this here, whether I charted it here, it doesn't matter. I could have charted it here, I could have charted it here, it wouldn't have mattered. My point of entry would have been this valley's completion, which is this support here, right? That support there in the future, right? So my point of entering this trade would have been here. So that would have been my target for this, for reasons that we can see. Why is a target? What is a criteria? I can't give you a set of criteria because you will have to learn how to draw trends on your own. You will have to learn these techniques and these facets on your own, and we will go over them and you will learn them, but you have to realize that criteria is something that you will create for yourself, right? I will do my best to show you how to create the criteria, but in the end, that's what it is, right? Okay, so how does accumulation and distribution tie in? This is something that we are attributing to every single move that we do, is accumulation and distribution. This is not this is not some theory that we are just in the back of our mind saying, well, we learned about accumulation and distribution, and that's it. We don't learn about accumulation and distribution and then just forget about it, right? We're tying this into every single trade. So in this trade, right? Well, let's just switch over here. In this here, we would have identified this based on our target as accumulation, right? And we can see now that if this zone is accumulation, right, we would have had multiple buy targets in here. So let's just go into this for a second, right? So our purchase target would have been, and I'm gonna get rid of that. We're actually gonna leave this. We're gonna leave this as a thin red line like this whole time. And we're just gonna turn off the outline. And we are going to turn down the color just, okay, we can leave it up actually. We would have seen that at every point here where we identified our accumulation target, where we identified this accumulation target, we would have known that because of levels, right? This is a level here, and this is a level here, up here. We would have known that every time we can kind of touch this, this level here, this target that we had, we can kind of sell this top side here. Now this didn't quite make it, so we might have missed it there, but maybe we could have reduced our position and sold here because we would have seen that it didn't quite make it, and then we could have reaccumulated, even if we reaccumulated here and the move went down and it came back up, now we are looking at a local level to test here, which we people shorted a little early. Again, we could have sold here, right? We could have reaccumulated every time it has touched down here. And we could have sold every time it touched up here, which technically is only once. Oh, I'm sorry, not that level here, this level here. We could have sold every time here. Technically that's once, but we could have reduced our position and took a sell somewhere in this area here, in the middle of that. And sorry for all the lines, let's get rid of that a bit. The point being is that we would have seen that this red box here is target, right? And this zone, this zone up here is also a target, right? So you have to understand there's two sides to targets. There's the side that you are a bear and you have targets, and you are a bull and you have targets, okay? Which leads me right, and that's why I stopped so abruptly, because I remembered that was coming up next, which leads me into my next point, bear targets and bull targets. So very important to know that nobody in this market is forever bullish, and nobody in this market is forever bearish. It becomes a very, when you're a new trader, you tend to have a likeliness towards considering yourself a bull or a bear. You either want to see the markets burn or you want to see them, fly to the moon. It's two extremes, right? This is something that a lot of traders fall into when they first start trading, and myself included. You are only a bear until you're a bull, and you are only a bull until you're a bear, because you have to realize, if this is target one, okay, you are a bull in this target. You are buying to push price up. That makes you a bull. The second this reaches your target, right, your selling target, your distribution target, right, your accumulation target, and you're a bull, the second it reaches your distribution target, you then become a bear, right? So you know, you can call it bear, bull, you can call it trends, you can call it whatever you want. I don't care. But the point being is that targets, right? You have targets like this: 1, 2, 3, 4, 5, 6. This could have been 7, right? And this could be 8. You are not purchasing one time without targets in mind. You cannot trade like that. You cannot. That's long-term holding. That's not day trading. That's not swing trading. That's not day trading. That's long-term holding. You are not buying here to wait for price to, you know, let's just identify some random level. Let's go with this swing low right here. Sure, why not? Let's just pick one. It doesn't matter. It doesn't matter if it's accurate now. It's just for the point of this. You are not buying here with the intention of holding to get to here. This move up to 719 sats is going to happen, but it's going to happen over a long period of time. It took a long time to get down. It's going to take a long time to get back up. Will it? Yes, it will. But it's going to take a long time to get back up. Maybe this actually would be more like this. So, you know, we would target like that. You have to realize that every time you are in a position, you know, stop looking at things as bear and bull. Even though I said you're a bear turning into a bull, that and a bull into a bear, that's just so that you guys can understand the concept of targets. Disassociate that emotional attachment to that word bear and bull, and just look at this abstractly as targets. What is my purchasing target? And the second you purchase, right? Oops. The second you purchase, just like we talked about in accumulation, the second you go into accumulation, you have distribution in mind. That is a target. You have an accumulation target, and the second you're buying, you should already have within minutes identified what your sell zone is going to be, so you can watch this trade play out, or so you can walk away from the trade, or so you can monitor it properly. And you have a target, and your target is this. That is what you are selling, right? That is your target. And you are selling there, right? You are distributing there so you can reaccumulate back down here, right? And you are reaccumulating here so you can redistribute up here. And you are redistributing so you can reaccumulate down here, right? That is targets. You have buy and sell targets always in mind. You are always looking for your next target. And as you become a better trader and step through the moves and look at where your targets are going to be, you will better identify when to get in, get out, and you know, the better refinement of these targets. And that's why at the beginning of this video I said targets are something you will work on for an infinity. It is something that, as long as you are trading, you are avidly working on targets as one of your foundational toolkits, as one of your, you know, it's the hammer to a carpenter, or the nail gun to a carpenter. I guess the nail gun now, or the drill now. Anyways. You are constantly looking at targets and constantly looking to refine this skill of where am I going next and why, and using levels to help you identify targets and so forth. So the difference between bear and bull targets is just that. These, and I'm going to put, oops, I'm going to put this one in red because it's an abstract term. Don't get tied to that call out of bear and bull. Really, bull market is just a trend, and a bear market is also just a trend, or a valley, or some completion of a move. It's not. Bear and bull market is a term we use to associate, almost like an ease of understanding. Use it if you want. I don't care. I'm not saying don't use it. I'm saying that it's trends and targets, right? It's the science of trading. Time frame targets. Okay, now this is an important one as well. Time frame plays a big part of targets, because a lot of the times I see kind of this expectation of people getting into a move, and they've identified the perfect target, and they've got entry, and the coin is starting to move up. And let's do this. Let's go to a 15-minute chart, okay? Because this is famous. I do this too. Everybody does this 15-minute chart. Whoops, let's turn our move tool on. 15-minute chart. Yeah, okay, let's just use this one. It's right on our screen. We don't need to know. It doesn't matter the time. So we identified, you know, maybe we sold here and we identified this is the perfect target to get into. Zoom in a bit here because you really can't tell how many candles this is. That's quite a few candles actually. So we're going to just zoom out just until, okay, so just until we can see both sides. So this is 1800 on the 21st, and this is 6 a.m. on the 25th. So that is 7 days. It took a 15 on the 15-minute candle charts. It is 7 days. I think my math is right there. Yeah, it sounds about right. 7 days for this move to reach target. The last thing you want to do is force these moves on these charts. Things take time. Have some patience, right? Things take time in the markets. You know, a lot of people, they see this top out here and they want to buy the bottom to sell right here, and then, you know, if you were to execute this move perfectly and you know, you were to kind of catch every single bottom and sell every single top, like, you'd be a god. You wouldn't be needing my videos, that's for sure. I would need you. It would be the other way around. You would be teaching me, right? This kind of buying every top and bottom and this idea of swing trading to the extreme is fine, and some people do it, but it's high risk, right? The whole point of this, having a target, is to reduce risk, right? You reduce risk by buying target zones and selling target zones, because if you see this as your target zone, say this was your swing low before you started to move up, and you're a scalp trader or a swing trader, and you kind of do that thing there, and you know, you bought here because this was your target, because you're impatient, because 12 hours has gone by. Actually, this isn't 12 hours, this is a few hours. A few hours has gone by and you're impatient and you want to make some crazy plays. That's not the proper way to use targets. That's not a target, right? Or, you know, this swing high right here. You know, it's not a target, right? You have to be patient with targets. You have to identify a target, and you have to, and let's switch this over to the 4-hour chart for this. You have to identify a target and you have to be patient, right? You have to identify where your accumulation zones are and look for those targets, those areas to hold price, right? Look, you know, we've got 8 hours here in this 4-hour chart. That's a long time for something to hold price. That's a lot of confirmation that we have just held price, right? And you know, let's look swing low, right? Swing low of the move down. You've got a level there. And so you can do it on 4-hour charts. It's a little different because this is 4, 8, 12, 16, you know, 16 or 20 hours or something like that, and you have a level that's going to be respected. But really, this is just, you know, switch to the 12-hour chart. Yeah, it's just a few candlesticks. So patience is really important with targets, because you will have buy targets and you will have sell targets. And the point of having that is to reduce the risk, right? And just like clockwork, targets reduce risk on both sides. Let's keep going with that concept in mind, that targets reduce risk. Targets are important because they play a huge part in reducing risk. If you've identified a key level of support that is being respected, right? Like this critical level that started the sideways move for Tron before it kind of took these good steps up, and kind of where it's at right now, and it's come on, there we go. You know, it hit this target accumulation zone, right? And then it took kind of this really beautiful move up, and let's see how much this would have been here. You know, if you sold at the very top and bought at the very bottom. Let's just say you sold the target. Let's actually stay within the ideas of this video right there. So if we bought accumulation, right, and we sold our target, you know, you wouldn't have to take that risk of selling up here, because if you're risking selling up here, you're also risking a fast dump, right? You're also risking this coin to move down fast. You have two targets. And if you identified both these targets correctly based on previous levels, which was a very, very simple thing that we did. Alls we did, right? Let's go back to this for a second. Alls we did was we took our swing low, which ends up being a critical level, right? And the swing low candle, the low point and the high point. And it's our levels, right? Our levels from the previous video. And then we identified what our target was based on this daily trend, right? We looked at the daily. Again, we looked at the daily and we kind of created this valley or this pattern, which gave us our accumulation zone for the future, which gave us a target, okay? So, oops, I don't want to do that. Misclick. So if the idea of targets holds true and the idea of accumulation and distribution is correct, which both of those things are true, then look at this move right here. We would have bought our target, right? We would have we would have bought our accumulation period, and we would have sold our distribution level, and we would have made 28.8% on this move. And there's other moves in here too. If we bought this accumulation, right, this is the first test, so we're not gonna buy that. You know, you would buy somewhere in here once this move is kind of confirmed. You would have bought, you know, kind of in here. And maybe you missed this because you were expecting it to come up to here and it didn't. And maybe you actually missed the target again. So you're saying like, okay, let's just average down, and maybe let's even if we sold halfway through this candle, because we can see for whatever reason it's failing. That's a daily candle. So there's going to be confirmation in there that that move has failed. So one of the things we would do is once it breaks the swing high of this level, we would start to sell. So let's just, you know, be modest with it. Let's pull it back. Let's pull it back a bit here, you know, kind of halfway through that candlestick, a little less than halfway. And then we rebought our accumulation zone right here, right? If this was confirmation, we rebought, and then we resold that same level. Once we saw it actually didn't make it up here, we kind of just, let's arbitrarily pick the same level, right? And let's look at these targets and how this would have played out. We would have had 16% here, 17% there, 28% there. You know why? Because we have targets. We have targets based on accumulation distribution, and we have targets based on patterns and certain criterias, which we will build up in the future. And we have levels of interest, right? Accumulation zones, distribution zones, simple candle, one candle drawing on a weekly chart, and this gave us the exact science of how this move played out. And that's the term I'm going to start using, is the science of trading, because I'm realizing as I'm teaching you guys this stuff and answering kind of community questions, that's the best way to refer to this, is the science of trading, because it's really not a strategy, it's really not a technique, it is just the fundamentals of how this market works. So let's just round these numbers up. 29, 17, that's 39, 46 plus another 16, 52, 62. We would have made 62%. I hope my math is correct on that. I just did quick head math. We would have made 62% here in these three moves across from August 20th to October 8th. So how many days is that? I don't know how many days are in August. Let's just say 30. I don't know. So that's 10, 18 days you would have made whatever we said it was, 60 something percent, because you have targets off accumulation and distribution, and targets off levels. And now I think you guys can see why I'm saying that every time we're watching a video going forward, it's very important that you understand the concepts of the past, because they tie into a great portion of what we talk about. So to follow every single video that we're making for the series, for the beginner's course leading into the advanced course leading into the pro course, you have to have a great grasp on the videos of the past, right? Or the prior videos. So very important that you watch them and fully understand them. And if it takes you 4 or 5 times, do it. Applying targets to a trade. That's basically what we just did. We kind of tackled both of these in one kind of go about there. So let's just go back here and look for a second. You know, let's talk about where this could potentially move in the future. Let's take away some of these graphs here. Okay, let's take away some of these graphs, and let's potentially just kind of theorize with Tron in the future here. We know where the move is now. Okay, what would I do from this point on to identify targets to kind of build this criteria? Well, I would start by drawing a few trends. This here to this here, right? Clearly that's creating a trend. You can already see it. This swing low to this here. And there's a reason why I'm using this swing low and this candlestick here. This, now don't get too caught up, guys, in this right now, but I just want to kind of justify why I'm doing this. Because this broke a level, and it didn't lose a level, it just broke a level. It wicked down, right? So the swing low of this wick down level, and the first time this wicked up here, right? You see, that is why I'm using this swing low, because this is the first wick up and this is a wick down here. So the swing low, and we can see right now it is looking like it's going to respect that. And I don't know what's going to happen with Tron in you know, in the days to come. You know, something I'm going to do, just copy and paste this, and it's going to line up with my levels pretty nicely there too, right? So that's kind of an uptrend that's being created. What I would look at is, as this move is going up I would expect this to either bounce off this until it's ready to come and test this level, or I would expect it to move sideways until it breaks this and kind of do this thing where maybe it retests this level, because this trend line right here is going to act as resistance and support in the future. So my targets would now be, if I was going to, just theoretically, not that I think this is the right purchase, because this is not a buy zone right now. You know, the buy zone would have been somewhere else in this. But let's just say I did buy right now, and this is where I'm buying. My target is here. My target is that level there, right? My target is going to be this level here. And there's a very specific reason why. Okay, and this is going to bleed a bit over into the advanced material, and I'm going to take this top side off for a second. This is going to bleed over a bit into the advanced material, but that's quite okay for this example right now. So let's do this. Once upon a time, these levels were all support, because we entered an uptrend back here. And let me just change these first, and then we will walk through the move, because this will be how I would identify a future target. Okay? Once upon a time, we are up here in this move somewhere. All we have right now is these moves. And there's other levels in here, so this isn't a final chart, right? Let's not worry about identifying every level in this chart right now. We're just doing this for this purpose. And you know, the couple levels we did identify, you can see they're like bang on. So let's pretend we are here in this move and we've gone into this wicked uptrend. We know that these are levels right now. So as the move continues, we've created, let's zoom out a bit here. We have created our valley start, right? So we know our valley, what's happening, you see, and we are respecting that valley until we break it and it becomes support, and then we draw another level. Okay, this would be resistance. So support in this video, I can't remember the order I did it before in the past, but in this video, support's going to be thicker and resistance is going to be thinner. So we're coming down. We test this level right there, right? We come back up, bounce off it, and we break that level. Okay, it's still support now until we wick down. Okay, this is still support, right? We talked about that before, but we wicked it there. So the second we wick that, right, we lost that as support. That is now resistance. Okay, we are now between these two levels. And you know, it's going to be funny, because as we go through these videos and I keep doing this, you guys are going to see how, when it wicks down past that level, how these two act as support and resistance, kind of as proof as to what I talk about. And you can see it right there, right? You can see it right there. You know, most people would say, wow, that level was broken right there. Well, it's not broken. And we went over that and exactly why. And this is kind of just, you know, further solidifies the things that I tell you guys as true and as accurate, right? There's a reason why we come up and test this level again, because this is still resistance and this is still support. We didn't lose a level there. We have to wick it, right? And right there, that's when we lose a level, that wick right there. Now let's see what happens. Look at that. When we lost that level, we did that same dance between the real resistance, which is this, which we lost at this candlestick, and then 3 candles later, over the course, this is a daily chart, so over the course of those 3 days, right? Over the course of those 3 days, we can see that was a level right there, right? Right there, we lost this. This is now resistance as well. And you can see resistance, resistance. We finally wicked it. Right, that's not the point. The point is not that we wicked it. We have to gain this level, right? We have to gain this level by wicking this. So I would expect to see, if I was looking at a target, there is some untested levels here. Okay, now let's look at this for a second. And this is outside of what we've learned so far, and this is advanced material, but you know, a little snippet of what's to come in the future. When we lost this level, the moment that it wicked right there, the moment that it wicked right there, this became, right, this became support lost, which is resistance gained. So this became support lost. At that point, this is now what's called an untested level. Very important to know, and for reasons in the future we will get into it. And I'm going to delete this for now because we have that stuff, we know it, we already discussed it. We can leave that trend line there. This right here, and I'm going to identify this by making it a dashed line. No, that one's not clear enough. This one, this is an untested level right now. Until that level is tested, this level will get rejected 90% of the time, or 85 or 95% of the time. There's not an exact, but it's something, you know, either 19 out of 20 times or 9 out of 10 times. So, you know, 90 or 95% of the time, this is going to get rejected on the first test because this is an untested level. Okay, and it gets rejected. Now, this is no longer an untested level at this candlestick right here. This candlestick right here makes this a tested level. It is still resistance, but it's a tested level. So this is an untested level. Oops, wrong one. This is an untested level. This is an untested level because we lost them. They haven't been tested since we lost them. This is an untested level. You see, now what I would expect to happen is to come and test this level. Whether we test it and completely reject down, or whether we wick up and come back down, or we might, you know, end up wicking 2 levels. But I would sell, right? This would be my target, this red here, because I know, right? And this is gonna try not to get too caught up in, well, untested level, I know nothing about that. This is just to show you that there is a criteria that you will be able to learn and glean off of me. And I want you guys to focus on the theory and the why and the science of why these things happen, and this will give you your criteria of what targets are. But we know, just from this being an untested level right here, this level here, it is going to touch and reject. We don't have the fear of missing some insane move like this. It's not going to happen. It would have to be some big, huge news release to do that. And you know, the likeliness of that is very small. You know, we're probably still going to have, okay, let's delete this. Okay. All right, being a wise guy, eh? We know that even if we do come and test this and it's some crazy news release, we're probably going to have some small retracement down to here. You know, that's only 430 sats down to 400 and, what is that, 407? 436 to 407. It's a small retracement, or we might retrace halfway and then come back and test this and retrace and come back up here and test this and, you know, come back down here or something like that. But the point of this is an untested level. So that is another part of the criteria that I use for targets. And there's probably about 20 different things I'm using as criteria for targets, between trends, patterns, levels of support, gain versus loss, resistance, gain versus loss, tested versus untested levels, how many times they've been tested. And we'll get into that as we go. It's too much for now to grasp, and there's lots of building blocks before we get to that. Okay, so criteria, you guys will learn. It will come, give it time. You know, for now, let's focus on the idea of targets, and every trade you enter, I want you guys to have a buy target and a sell target. And before you guys get into a trade, I want you guys to identify the levels first, have some patience, and identify, well, okay, so sorry, that's the wrong order. Identify the levels first, pick what you think is the appropriate target, and this is a learning curve. You're going to pick it too low sometimes, and you're going to miss out, and you're going to pick it too high, and you're going to enter too soon. But the idea is to start getting to this habit of having the appropriate and correctly identified levels, then having a target based on accumulation, saying, this is a level that I am deciding is my target, and I believe accumulation will happen here for these reasons. So this will be my buy target, and if that is my buy target, I'm going to have a sell target of this. So I want you to get into the habit of setting up 2 targets, a buy target followed by a sell target right away. To tie into the idea that as soon as you enter accumulation, you should already have distribution planned out. This is something we talked about in a past video. When the second you enter accumulation, you already should know where distribution is planned out, and that is what is a target, right? So identify levels, pick a target based on accumulation where you think it will happen, pick a target based on distribution where you think it will happen, and then plan your trade. And this will help you reduce risk because you are mindfully saying that I believe this is a target, and when you're buying a target zone, if you are correct, you are buying the correct zone and you are buying something's low point. And if you are identifying the top, you like we did with this, right? Like we did with this tool here where we said, you know, this was a 28% move and this was 17% and so forth, right? We identified those three targets and it ended up being 65 or 70%. I don't know, something in there. So I think that covers it pretty well, what targets is, guys. Let's go over this list, take another look. The importance of targets, a toolkit that you will use for the rest of your life in every single trade, no matter what you do. What is a target? Pretty self-explanatory. Target is, you know, your target. What makes that a target? That's up to you based on your criteria. How does accumulation and distribution tie in? Exactly how we described it, targets of accumulation and distribution, right? When you're distributing, you have a target of reaccumulation. When you're accumulating, you have a target of distribution. So you're buying with a sell target, you're selling with a rebuy target, or maybe you're just selling to get out of the coin because you believe the move is done, and that's fine too, and you make one trade and that's it, and that's good. And you make your profits and you move on. Bear and bull targets, again, just different terminology. I call them market terminology for trends or patterns, things of that. Time frames with targets, have some patience, realize that a 15-minute move is only going to be as good as a 15-minute level, and so forth, hourly, 4-hourly. Identify targets and stay strong, hold strong, right? Identify targets and have a little bit of patience and look to get that proper entry, right? It will reduce risk. Targets reduce risk on both sides, right? Targets reduce risk on both sides. So when you have properly identified accumulation distribution zones, it reduces your risk. It reduces your buying too soon risk and selling too late risk. And apply all this to a trade. Simple as that. It's not quite so simple, but from this point on, you will now know that you have targets in a trade and all the things we learned in the past about accumulation and distribution. So you'll know what accumulation and distribution is, and you'll know those are targets now based off levels. So you kind of can start to see how everything is tying together, right? So I hope you guys enjoyed this video. It was an important one. They're all important, but this one is important. I'm going to probably say that at the end of every video because I think they're all important, but I hope you enjoyed it. This was an important one. See you guys on the next one.